All right, ladies and gentlemen, welcome back to another Eval to Payout episode. It's episode 3 in the series. And again, today we didn't take any trades. It was a very annoying day. I feel like I need to be a bit more aggressive in the market. But let's just get into the analysis. There definitely was some trades that I could have taken today as well, which is, again, another frustrating aspect of it. I should be taking a lot more trades and being a bit more risky. But I'm just trying to take trades, especially on this eval. Usually, the way I would trade evals is a lot more aggressive, a lot more high risk. But because I'm trying to showcase genuine trading and risk, so I'm trading a bit more timidly. But I think I'm going to take some more aggressive trades going forward. But yeah, no, starting on the monthly time frame. So just before market open, we were just sitting above the open of this bullish fair value gap on the monthly, which is a massive draw. Ended up being the main draw of today. On the 4 hour, you can see we have fair value gaps above, so we have some imbalance above, which is it kind of fueled my bullish bias to start the day off before we before market opened. And we also have protected low that we swept before market open as well to fuel that bullish bias. And then we had a LRLR below that low resistance liquidity range, just for maybe just to see on the charts, just as a target, just of a pool of liquidity and a target. Onto the 1 hour, more of the same thing. We just got the imbalances. Onto the 15-minute time frame, before market opened, which I'm gonna use the replay tool just to go back, just so we don't. There we go. So before market opened, we had this 15-minute fair value gap, which I'm calling a fence. The reason why I say fence is because I like using, wherever my bias is. So in this case, before market open, I was bullish just because I like the LRLR below, above the London high, Asia high, and also the fair value gaps that we had on the 4 hour and 1 hour. That's before obviously market opened. The reason why I call it a fence is basically this is kind of my line of defense where if we start to trade below this and if we inverse this, then I've completely shifted my bias bearish, just because we've got London high below, we've got the monthly gap below, which I'm not going to lie, I have to be honest and come clean. I did not realize how close we were to that monthly gap. So I did kind of miss the draw in terms of that. Otherwise, I do feel like I would have been able to come out green today. But like I said, this was my kind of line of defense, and I use this as a way to kind of alternate between my biases and make sure I always have a threshold at which I kind of switch my bias. So that's on the 15-minute. I've marked out the London high, the Asia highs, also potential targets for a bearish bias. But yeah, as market opened, let's go ahead and just get rid of that. Boom. So okay, no, we're still here apparently. Let me out. Okay, cool. So as market open, as you can see, we're gonna go to market open. Initially, the dilemma that I was facing was we had equal highs above. We also had some really nice LRLR below. So the first potential trade would have been here, where we just take this short down to the LRLR. However, the reason why that wasn't I didn't even think about taking this was mainly because of the fact that we had equal highs above. I do not like taking shorts with equal highs above unless there's a pure proper draw on liquidity to the downside. And then as you can see, we started to trade below this 15-minute fair value gap that we marked before, traded below this protected low, and now I started to shift my bias a lot more bearish. Now the one trade that I did say was pretty decent today, 100%, was this 2-minute short down to the monthly gap, which yeah, that was a very good trade. A trade that I did not take, but that 2-minute short, the draw for the monthly gap is very, very strong. So a trade like this for a lot of people is a no-brainer. I do like it in hindsight. It's very nice. Also coming up and tapping into this kind of small little 2-minute fair value gap. Another one that I kind of like the look of was this little retrace. So into this 1-minute fair value gap, we're clearly very bearish at this point. This is even before we've hit this monthly gap. So another entry could have been here of the CISD, or just straight away from the tap of this fair value gap, like so. Kind of like an optimal trade entry to an extent. And we tape that down to the monthly gap as well. So those were that's all that really happened today, because obviously we just got this crazy dump again for the second day in a row, which I don't know if I could say I'm surprised at this point. And then going further, you can see we started hitting a little roadblock here. So we had another decent inverse. If I show you the 2-minute, you can see here we had a little 2-minute inverse. If you took this, fair enough. You're trading the retracement. I just think kind of trying to catch the falling knife like this is just never a good idea, especially when we're just so much momentum to the bearish side of the market. It would have been a break even anyway, so that's completely fine. And then also we had not much else really. We have a setup developing now, which you can say we swept liquidity, and then this 2-minute fair value gap. Intrigued to see whether we have a better entry on the 1-minute. Not really. So just a 2-minute. And yeah, this really today, the main kind of idea is that we try to get short down off of market open all the way to the monthly gap, which we weren't able to do, unfortunately. But yeah, now definitely feel like we could have found something on a different day, but we're just gonna take it slow. We're not gonna get too kind of annoyed. That's 2 days in a row of no trades, which is honestly nothing. I've gone a lot longer without taking trades before. But yeah, so that's the market. That's the market for today. Can't really think of anything else to talk about. But yeah, that's all for today.